Hello! Welcome to Slate Money, your guide to the business and finance news of the week. I'm Felix Salmon of Axios with Emily Peck of Axios.
Hello.
We're also here with Elizabeth Spiers of the New York Times.
Hello.
And we are going to talk about Elon again, because we can never, no matter how many times we try to not talk about Elon, we always end up talking about Elon. He just won a big vote at Tesla, so we're going to talk about that. We are going to talk about GameStop and Roaring Kitty and what is going on there. We're going to talk about Kathy Hochul and congestion pricing. We have a Slate Plus segment on Bliss Restaurant in St. Louis and grown and sexy vibes. It's all coming up on Slate Money.
Today's episode is supported by What Should I Do With My Money? An original podcast from Morgan Stanley. Smart people often don't feel smart about money. Find What Should I Do With My Money on your favorite podcast player to hear from people just like you getting help from experienced financial advisors.
This episode is brought to you by La Quinta by Wyndham. Your work can take you all over the place, like Texas. You've never been, but it's going to be great because you're staying at La Quinta by Wyndham. Their free Bright Side breakfast will give you energy for the day ahead. And after, you can unwind using their free high-speed Wi-Fi. Tonight, La Quinta. Tomorrow, you shine. Book your stay today at lq.com.
Okay, guys, it wasn't even close. We talked about this on previous episodes, how there was going to be these two big votes at Tesla, one on moving it to Delaware, one on reinstating the $56 billion Elon Musk pay package, which is now a $44 billion Elon Musk pay package because the stock has gone down. Shareholders voted, and overwhelmingly, they voted in favor of both of them, even though it was hard to get a majority because retail investors don't vote and they make up a large percentage of the holding. And even though all of the big, shareholder advice companies like Glass Lewis and ISS were like, you can't vote for this, even though it's probably going to cost Tesla like $25 billion to reinstate it, even though it's no incentive. There's no incentive involved in this because all of the incentives have already been hit in the past, even though it makes no sense. Elon Musk just waltzes away with a massive, massive landslide victory on both fronts, comes out at the Tesla annual meeting doing a sort of Steve Ballmer happy dance, is completely off his tree, starts talking about how we're all going to have like dozens of robots working for us, and is in full-on Elon, I'm going to take over the planet and never mind electric vehicles or cars or whatever. I'm like doing galaxy brain stuff for decades in the future. He's super empowered. This looks like a massive vindication of what you might call sort of Elon capitalism or crazy capitalism. Like the rationality seems to have been left in the dust.
Well, doesn't it just indicate that shareholders are really looking at Tesla as a meme stock? Because if your logic is that the stock is going to go up simply because Elon's there, which appears to be the logic, and that his entire job is to just keep the stock price high, ostensibly by making all these crazy promises, and whether he delivers doesn't really matter. How does that differ from what you're talking about?
Well, I think it's interesting because I wrote about this a little bit this week in Axios, that he wasn't going to leave, right? Like there was no world in which he loses the vote and just totally throws his toys out of the pram and sells all this Tesla stock and, leaves the company entirely. Like he is so much of his net wealth. He needs the liquidity. It's his only public company. He was always going to be there in some form. So I think the question, is do investors want this to be an Elon crazy stock? And as you say, like a kind of a meme stock. Or do they want it to be a successful car company? Because it's pretty obvious over the past couple of years that Tesla is kind of doing a bad job at being a successful car company. The Cadillac Lyriq is going to outsell, the Cadillac's EV is going to outsell the Tesla Model X this year. The biggest innovation that Tesla has had in the past couple of years is the Cybertruck, which is a national joke. So Tesla was 3 years ahead of the competition like 3 years ago. Now it's neck and neck with the competition.
I don't know. So a lot of the reporting on this, they'll say Elon Musk won this vote. The pay package has been approved. However, this doesn't change the Delaware court ruling that rescinded the pay package, right? And it doesn't. And I guess the idea now is that Tesla will use this vote and go back to the court and say, look, you rescinded the pay package because you said shareholders weren't fully informed about, the circumstances of the pay package. Well, they've since been fully informed. They went back and they voted for the pay package again, like, screw you, overturn your decision. Shareholders are into this. And I feel like the reporting, everyone says it's not clear that that would happen, that the argument would hold water, et cetera. To me, the argument holds water. The shareholders have spoken. They like Elon Musk. They want to pay him more than any other CEO has ever been paid. Let it slide. This is fine. It's all fine.
Yeah, it's their money.
It's their money. The company, though Felix is saying maybe isn't as successful as some Cadillac car that I've never heard of. I was just in a parking lot at a fancy gym, 25% Teslas in this parking lot. Like, this is amazing. There's no other car company that's really become a brand the way Tesla has over the past decade or so. Really, no. Like, it's hard to break in.
They did come from nowhere to transform the landscape. What Tesla did for EVs is fantastic. I just don't think that Tesla, necessarily makes the best EVs anymore. It certainly doesn't make the most EVs anymore. That's BYD.
So BYD can't sell in the US?
BYD can't sell in the US, but in order to be a successful automaker, you need to be global. And they're getting whomped everywhere that BYD sells, which is most countries.
Also, they have a lot of build and manufacturing problems that, when Elon gets up and says, actually, I'm going to spend all my time on AI and a Tesla robot instead of fixing, their infrastructure and figuring out manufacturing. If I were somebody who's invested in Tesla because I believe in the long-term promise of the company, that would give me pause.
If I believed in the long-term promise of Tesla as a car company, I think what I would want would be for Elon to disappear down an AI rabbit hole, devote 1% of his time to Tesla, and install a Glenn Shotwell type person to run Tesla as a car company and to do it really well.
Yeah, but so much of the market, and maybe Felix, you'll disagree with me and talk about like fundamentals or something, but so much of everything now is marketing. And say what you want about Elon Musk, and we have said all the things about him over the past few years. He's good at marketing and getting attention. Like, the Tesla story is the business story that everyone cares about right now. And that matters to the stock price, I think.
You see, so I think there is no company in the world. And I'm really, I'm thinking, well, what about maybe like GameStop? We'll talk about that later. But really, there's no company in the world with a bigger delta, with a bigger difference between the company and the stock. Tesla is really two things at once. It's a stock market story and it's a corporate story. And both of them are compelling. Both of them are interesting. Both have this incredible narrative attached to them. But they are massively divergent. And they barely bear any relation to each other anymore. Mm-hmm. And so, like, I do think you're right, but I do think you also have to be really clear about which one you're talking about. And I do think that Elon, insofar as he has a major effect on either of those two things, has a much bigger effect on the stock than he does on the company.
Yeah. Also, just in as much as to your point about marketing, there's data on Tesla buyers where they say the two reasons they buy Teslas are for style and performance. And on the style front, that's part of the reason why Cybertruck was such a disaster. It's sort of, if Tesla had a cool brand that people wanted to be associated with, that just kind of turned it around a little bit. It made it a little cringe. So I think Elon sort of cuts both ways on that front longer term.
Yeah, ever since Elon bought Twitter, he has probably been a net negative in terms of marketing for the car company, not for the stock. He's still been a net positive for the stock, but for the car company, EVs, for better or for worse, have become politically valent. Like, EVs sell much, much higher numbers in blue states than in red states. And in red states, they're considered to be like woke green vehicles. And the Democrats, the rich Democrats, who historically were the core EV purchasing demographic, are looking at Elon's heel turn on Tesla and the way that he's become this, anti-Semitic MAGA person. And they're like, I just don't want to support that. So in terms of selling new Teslas to the kind of people who buy new Teslas, I'm not sure that Elon is all that good at that anymore.
Yeah, that's an interesting question. And there are these bumper stickers now that people put on their Teslas that say, I bought this before I knew Elon Musk was crazy. So yeah, that is an open question going forward, if the gym parking lot will still be filled with Teslas in like 3 years' time or something, when they all roll over and get new cars.
But they're not going anywhere, right? I mean, EVs have very few moving parts. That's one of the reasons people like them. That's one of the reasons they're going to wind up becoming the majority of cars on the road. And so all of those Teslas that Tesla sold over the years are going to wind up getting driven by someone, even if it's not by the original owner. And those people may not go to your swanky gym anymore, but those people are going to be driving around, and those Teslas are going to remain on the road for a long time to come.
Right. So I guess the question is, do the troubles of the company ever dissect with or intersect with or bring down the actual stock? Or has it become these two kind of separate things where the stock is kind of memey, like Elizabeth originally said, and the company is, the company, a normal corporation?
One of the most surprising things that I have learned over the past 3 or 4 years is the astonishing amount of time that a meme stock can defy gravity. If you'd asked me, can you have like a crazy irrational run up in a stock price, in 2019, 2020, I'd be like, of course, those things happen all the time. They can last for days. They can sometimes last for weeks, But in the case of Tesla and Taper, even in the case of GameStop, it turns out they can last for years. And so long as you have a large base of people who believe in you and who are willing to just keep on buying and who don't seem to run out of cash to buy the stock, there's no obvious mechanism to drive it down. So yeah, I think, if you look at Tesla's valuation, it's trading at 50 times forward earnings or something. Most car makers trade at 5. So it's obviously at this incredibly insane, unjustifiable valuation based on fundamentals. Because I don't think we're in a world anymore where people are expecting Tesla to make 50% of new cars. We're clearly in a highly competitive car market, and Tesla is clearly not running away with the entire market, which was kind of the thesis which drove the stock up in the first place. But even though that thesis has since evaporated, the stock price hasn't fallen back that much.
Can I ask a question about shareholder votes? Because when we first talked about shareholder votes, in my head, I was like, shareholders always do whatever the company asks for. And then as we were heading into this vote, I think it was you, Felix, maybe it was someone else, and people were just the vibe was like, who knows what could happen with the vote? Who knows? And I'm thinking like, it's going to be like what it always is with these votes. They're just going to do whatever the company wants. Why were people saying it wouldn't work out like that? And am I wrong? Do shareholders often vote down the company and what it wants?
So the thing that springs to mind is the AMC vote, when AMC was also a meme stock and wanted to issue a bunch of new shares, but they'd run out of shareholder authorization to issue new shares. So they came out and said, look, the share price is really high. We should be issuing new shares. Can you please vote in favor of issuing new shares? And a vast majority of the shares who voted were like, yep, sounds good. Go ahead, issue new shares. But because it was so overwhelmingly retail investors, and retail investors overwhelmingly don't vote, they couldn't get the majority of all shares outstanding necessary to be able to do that. And they wound up having to do this ridiculous thing called apes, and we won't go down that rabbit hole. So at least in terms of the reincorporation in Delaware, because so many of Tesla's shareholders are retail investors, and because you needed a majority of all shares, not just a majority of votes, people were really, really thought like they're just not going to get enough votes. Basically, a failure to vote counted as a no vote.
But they got it.
And they got it easily. It wasn't even close.
And the retail investors did vote. I was reading that this morning.
And it looks like the retail investors. Although we don't know for sure. Like it's hard to tell from the results what proportion of retail investors voted, but it looks like Tesla did an astonishingly good job at showing the Tesla investors how to vote, making sure that they did vote and saying like, come along, vote. You believe in Elon. You can show this by buying the stock, but you can also show this by voting for what he wants you to vote for.
And do we think there's a lesson here for the presidential election, or are you mad that I even brought that up? Elizabeth?
I got nothing. I don't think that's really comparable to a meme stock.
The electric car has three basic advantages: no noise, no fumes, and no gears. It has a 24-volt system, one motor, belt drive, and a range of about 35 miles.
Slate Money is sponsored this week by Burrow, which is a new kind of furniture company. It is known for its timeless design, thoughtful construction, and little details that make life in your space easier. And for a perfect example of the Burrow philosophy in action, look no further than one of their all-time most iconic pieces, the Nomad sofa. Its mid-century design meets modern convenience. It has a sturdy hardwood frame. It has galvanized steel hardware. It is solid. It is durable. It will last you for years to come, even if you want to put it outside. If you ever need to add a seat, if you want to make it bigger, if you want to make it smaller, or if you want to move your Nomad sofa to another place, you can disassemble it just as easily as you assembled it. No tools needed. You can pick the fabric style, the color, the arm style, the legs, and more. You can make it completely your own. You can even add an ottoman. You can turn it into a sleeper sofa. It has over 69,000 ways to personalize. I have a Burrow sofa myself. I have two Burrow chairs. They put together incredibly easily. They're very beautiful. And they're going to last me forever. If you also are interested in Burrow furniture, Slate Money listeners can get 15% off their first order at burrow.com/slatemoney. That's Burrow, BURROW.com/slatemoney for 15% off. Burrow.com/slatemoney.
Get 3% daily cash back when you use Apple Card to buy a new iPhone 15 or pair of AirPods at Apple. You can choose to grow it at 4.4% annual percentage yield when you open a savings account through Apple Card. Apply for Apple Card in the Wallet app on iPhone. Subject to credit approval. Savings is available to Apple Card owners subject to eligibility. Savings and Apple Card by Goldman Sachs Bank USA, Salt Lake City branch. Member FDIC. Terms and more at applecard.com. So before we go to the break, I want to tell you guys about our Slate Plus segment for the week, because we are talking about this restaurant in St. Louis that has a very unusual policy of only allowing diners over 30 if you're a woman and over 35 if you're a man, which seems kind of interesting and unique. And also, this restaurant is all about having a grown and sexy vibe, and we try and parse that out and talk about whether this whole thing is legal. So Slate Plus members will get to hear that at the end of the show. If you're not a Slate Plus member, if you don't want to hear the ads, and if you want a bunch of other great Slate stuff, you should sign up for Slate Plus, because with Slate Plus, you get ad-free listening, like I just said, plus unlimited access to all Slate.com content. And there's a members-only newsletter. And of course, an exclusive bonus segment in every regular Slate Money episode and on a lot of other shows as well. So you're going to want to sign up at slate.com/moneyplus. That's slate.com/moneyplus.
We should segue seamlessly into the whole issue of GameStop, which is also in the news and is really like a genuine meme stock. And, Keith Gill, Roaring Kitty, the progenitor of the meme of the GameStop craziness in 2021, has come back. He recently posted, just on Thursday, he posted on Reddit, like what his shareholding is. He owns $260 million worth of GameStop shares. He is the largest individual shareholder in GameStop, with the possible exception of Ryan Cohen, who's the chairman. No one's entirely clear where he got all of this money, because he started with basically zero, and I saw numbers around on the order of 30 million that he might have made, playing the GameStop thing. And so But how he parlayed the 30 million into 260 million, I have no idea. Or whether the 260 million is all his money, we don't know. It's all a bit odd. But he has gone from being the little guy to being the big guy. He now is a major investment force, at least in this particular stock. It's kind of amazing to behold.
But didn't he just have, I think it was last week already, he had a YouTube live stream. He had come back and shown he has lots of investments in GameStop and announced he was going to do a YouTube live stream. And a lot of people watched it and signed up for it. But as he was doing the live stream, the stock was falling, which is not what's supposed to happen, right? When Roaring Kitty speaks about GameStop.
It's because he's not the little guy anymore. And somehow the mechanics of 2021 aren't the mechanics of 2024. But the stock is still up. I mean, the stock fell during his YouTube live stream, but that's not important. What's important is that it has been rising. It is now back at very, very memey levels, far higher than can possibly be justified on any kind of fundamentals. And GameStop itself has managed to take advantage of this. They just finished a $2 billion share sale at these elevated levels and basically said, hey, if you guys want to pay this kind of crazy money for the stock, we will happily take that money from you and put it onto the balance sheet of GameStop, which now has like $4 billion of cash on its balance sheet. And even if it's losing shed loads of money, that $4 billion of cash is going to last it indefinitely. So the meminess of GameStop has really strengthened the company, which is kind of awesome.
Yeah, it's also a little unclear about what Roaring Kitty's sort of long game is, because he's also supposedly sold off a big options position.
No, he just rolled that into shares. What he had last week was a combination of options and shares. And now he's basically exercised his options, and now it's just all shares. But those shares are worth $260 million.
So what's this guy's deal? He came onto the scene and his argument was GameStop is actually very valuable, great company. But no one thinks that anymore. No one ever thought that. Well,
I think he maybe did think it. I think he was he and Ryan Cohen were the two people who actually did think it for a hot minute. But the other really, really crucial and important part of his thesis was, we're going to stick it to the hedge fund managers who are short, right? And that was it became this morality play where you had Melvin Capital on one side, this big faceless billionaire hedge fund guy, and the little guys as led by Keith Gill on the other side. And then they would engineer the short squeeze. And a huge part of the initial run up in 2021 was a short squeeze. You can't really do a short squeeze anymore because no one's dumb enough to go short GameStop, in a massive big trade when they know that they're up against the sort of Reddit hordes. And plus, as I say, Keith Gill now is the big guy. He has a massive position in GameStop. And Elizabeth asks a very good question. What did you at some point he has to sell this $260 million, right? It's not going to, is this his retirement fund? Is he going to have this when he's 70? What? None of it, the whole thing is very odd.
None of it makes any sense.
It reminds me of the sort of early aughts kind of environment online around retail trading, because there are a lot of things that were very close to just pump and dump schemes. And I remember there was a 14-year-old Michael Lewis who got charged with securities fraud because people thought he was manipulating a small cap stock. And the dynamics of this, if you look at the message board posts and everything, it's sort of the same language. It's a lot of people who are kind of retail traders who believe that they have some kind of edge, and then they convince everybody around them that, this is true. And that, and they always use the language of value investing, even though it's obviously not what's happening, but it just feels very familiar to me.
I think what's new is that we have seen a bunch of sequential crazy bubbles and people getting very rich in crypto between then and now. And what I wrote about in my book when I was, in that chapter about from ladders to trampolines, is this whole concept of being able to use the stock market as a way of getting rich quick, which is an outgrowth of being able to use crypto as a way of getting rich quick. And the thinking is similar, and there's a large overlap there. The language is the same. People talk about apes in the same way. You know, people talk about apes in the context of AMC, but they also talk about apes in the context of Dogecoin. And in crypto, you're absolutely right. Like it's all about pump and dumps. It's all about like buy into the dumb random coin that we've all identified and buy it when it's going up and sell it before it goes down. In stocks, I'm not sure. Like there's some of that, and there's some of that like intraday options trading and that kind of stuff, which is just pure gambling. But to be fair to him, that doesn't seem to be what Keith Gill is doing. You know, his holding period is surprisingly long, and he doesn't seem to be dumping.
And there was some reporting from the Wall Street Journal, I think last week, that E-Trade was looking at maybe kicking him off their platform.
Right. That's such an interesting story, right? Because this is the other thing that Elizabeth was mentioning, is that people worry about stock manipulation. Right. They worry that if he's, you know, sending dog whistles on Twitter and doing YouTube live streams and posting on Reddit and doing all of the things, that he is doing so in full knowledge that those actions are going to move the stock. And he can position himself in advance of those actions in order to take advantage of the moves in the stock that he is going to cause. And that kind of looks and quacks a lot like stock manipulation. I don't think it's something that, you know, the SEC would necessarily be able to prosecute, or the New York Attorney General or anyone like that would be able to prosecute. But if you're Morgan Stanley, which owns E-Trade, you're like, yeah, this is smelly, and we have absolutely our burden of proof is not we need to be able to, you know, get a jury to find you guilty in the court of law. Our burden of proof is like, do we want you on your platform doing stuff that is a little bit smelly? And if they don't, then they have every right to just kick him off.
But so far he hasn't been kicked off.
So far he hasn't been kicked off because, and this, I mean, I don't know. I am not in those rooms in Morgan Stanley making those decisions, but I think they're scared. I think that if they kicked him off, they are worried that there's going to be a backlash against E-Trade and Morgan Stanley on Reddit, and they don't want like a massive boycott of E-Trade from everyone on Wall Street Bets, because that would really hurt them.
Weird. It's just vibes. It's GameStop. Have you guys ever been to GameStop?
Yes, because I have an 8-year-old, well, now 9-year-old, but yes.
And so you go to GameStop and buy video games, and then he puts the physical media into his consoles.
They sell everything that's kind of gaming adjacent. So he buys Pokemon cards. He'll buy cards for V-Bucks on Fortnite. And they just have a lot of like collector memorabilia kind of things that people who are into anime and gaming like.
Emily and I are not video gamers, so we don't understand these things.
I understood. Hey, don't put me in your club. Get 3% daily cash back when you use Apple Card to buy a new iPhone 15 or pair of AirPods at Apple. You can choose to grow it at 4.4% annual percentage yield when you open a savings account through Apple Card. Apply for Apple Card in the Wallet app on iPhone. Subject to credit approval. Savings is available to Apple Card owners subject to eligibility. Savings and Apple Card by Goldman Sachs Bank USA, Salt Lake City branch. Member FDIC. Terms and more at applecard.com.
Slate Money is sponsored this week by ZBiotics. There's now a game-changing product to use before a night out with drinks. It's called ZBiotics. Let's face it, after a night with drinks, it's tough to bounce back the next day. You have to make a choice. You can either have a great night or a great next day. ZBiotics is a surefire way to wake up feeling fresh after a night of drinking. ZBiotics pre-alcohol probiotic drink is the world's first genetically engineered probiotic. It was invented by PhD scientists to tackle rough mornings after drinking. Here's how it works. When you drink, alcohol gets converted into a toxic byproduct in the gut. It's this byproduct, not dehydration, that's to blame for your rough next day. ZBiotics produces an enzyme to break this byproduct down. Just remember to make ZBiotics your first drink of the night, drink responsibly, and you'll feel your best tomorrow. Go to zbiotics.com/money to get 15% off your first order when you use money at checkout. ZBiotics is backed with 100% money-back guarantee, so if you're unsatisfied for any reason, they'll refund your money, no questions asked. Remember to head to zbiotics.com/money and use the code MONEY at checkout for 15% off.
Today's episode is supported by What Should I Do With My Money? An original podcast from Morgan Stanley. Smart people often don't feel smart about money. Find What Should I Do With My Money on your favorite podcast player to hear from people just like you getting help from experienced financial advisors.
Remaining on the subject of things which make no sense.
Yes.
Emily, what the fuck is Kathy Hochul thinking?
Kathy Hochul, the governor of New York, up until the end of 2023, was a big booster for congestion pricing, this system that people have been dreaming of for decades, in which New York would put a toll on people who want to go into the central business district, that is 60th Street and below. And everything was in place, and Hochul was supporting it, picking up the baton from her predecessor, Governor Andrew Cuomo, who was on my plane last week, but I did not ask him about this, and I'm sorry to all of you for that. All of a sudden, last week, while Felix was out on vacation, she said, let's pause congestion pricing. And I mean, it's really wild that she is pausing it because all the machines for the tolling had already been installed and in place. Like, this was ready to roll. It was supposed to start June 30th. That is really soon. But she came out and she said, let's not. She talked about diners.
Yeah, the stated reason was like, folks from New Jersey want to drive into Midtown to eat at a diner.
Like,
New Jersey, by the way, has the highest concentration of diners of any state in the union.
Right. Yes.
Like the whole thing is based on is very bizarre. It has all manner of weird fingerprints on it of people who aren't Kathy Hochul, but who have quite sensibly remained relatively quiet. Because what is both surprising and heartening is the absolutely enormous backlash to her and to this decision. Like across the aisle, I've been talking to Republicans about this. I've been talking to Democrats about this. But New Yorkers in general are furious at her, and I don't think she had a clue how popular congestion pricing was until she killed it.
Although we should clarify here, when we say New Yorkers are furious, we mean New York City people and not New York State at large. And to me, this is just like another entry in the long history of Albany fucking over New York City, which makes some, upstate constituencies pretty happy. I don't think that's what's behind it. I think if what she's saying, her argument about the diners is in good faith, and I'm not sure it is.
I'm pretty sure it isn't.
It doesn't even make sense from that perspective, because there are studies that show that when you have cities that are more walkable and you can use bikes and things like that, consumer spending goes up for everything except supermarkets, which seems intuitive to me.
This was not an empirically driven decision. It was clearly a politically driven decision, and it was clearly a political miscalculation. Which there's something in the water, Rishi Sunak deciding on an early July 4th election in the UK. Obviously a bad decision. Rishi Sunak deciding to leave the D-Day memorial, stuff in France a day early. Clearly a political idiocy. Emmanuel Macron calling elections in France, clearly politically insane. I think just what's happening is that the world's politicians just took stupid pills en masse, and they're just making really dumb tactical decisions. But it was a tactical decision. It was based on this idea that congestion pricing was deeply unpopular in certain sort of New York City adjacent constituencies, and this was always known, right? If you look at every single city that has implemented congestion pricing, it's a little bit like the Olympics. The locals all hate it up until the day of and the first week of it being implemented. And then a couple of weeks after it starts, it becomes incredibly popular and broadly popular. So you don't kill it at exactly the point that is the lull before the popularity. We've all seen this movie in many, many other cities. We knew how it was going to play out, and yet somehow Like she didn't. She just had car brain.
Yeah, what's weird is that even if that is the political calculus, it doesn't really make sense to me, because even if you're worried about voter defections in borderline House districts, which is, the kind of conspiracy theories that Hakeem Jeffries talked her into it, the kind of people who would defect over something like that are pretty highly engaged voters, and they know the difference between what the state can do and what the House can do. And I just, even that political, even doesn't make sense to me.
Exactly. No one's voting for their member of Congress on the basis of what Kathy Hochul may or may not have done in congestion pricing. The whole thing is odd, and it is really devastating for the biggest and most important transit system in North America, because the idea was that this would raise $1 billion a year, which would not just go to the MTA, but would go to service new MTA debt. They were going to issue a $15 billion bond that was going to get, serviced with this $1 billion of congestion pricing revenue. And that $15 billion was going to be front loaded into these massive investments that the MTA desperately needs. And now Hochul has to find $1 billion a year extra for the MTA, and no one is cooperating with her various plans for finding it. But even then, in the best case outcome, it's still just going to be a kind of annual scramble to find the money, rather than a predictable revenue stream that you can borrow money against and use to invest in, accessibility and reliability and all of the other things the MTA needs. Not to mention all of the first order wins in terms of congestion that we're giving up. We are going to continue to have more traffic than we need, and we are going to wind up having more pollution than we need, and so on and so forth.
And the thing is, there's research that shows that the people who drive into Manhattan are wealthy and could well afford it, and probably weren't even the people complaining about this. The idea of it is really, upsetting to people. $15, it already costs so much to cross the bridges, and no, and I can't believe it. But they would have forgotten about it as soon as it happened, because they're not actually driving in very often anyway.
And besides, have you tried to park in Manhattan recently? That's going to cost you $80. Come on, people.
Yeah. But it is just really sad for the MTA, because it has these death spiral economics. As far as I understand, ridership hasn't recovered from the pandemic, even though all other metrics in the city are better recovered. Office occupancy is going up, right? I mean, things are getting a lot better, but for the MTA, ridership hasn't recovered. It's deteriorating, but that means less revenue, which means they can't really do much to fix that, which means it gets worse, which means ridership continues to go down because people are like, ew, the subway is gross. You know what I mean? It really needed the money. And now I don't understand what this woman has done.
The one thing that I do find fascinating is that she does seem to have mobilized an army of single issue voters who are going to vote against her in the next primary.
I feel like maybe that's right. I don't know who you're talking to, Felix. You did say Democrats and Republicans, but I suspect a lot of them, like Elizabeth pointed out, are in the city. I feel like outside of the city, there's probably less.
But the city is what, 40% of New York State, something like that? It's a large voting bloc.
It's a majority of voters, which is why it really makes no sense that Albany's constantly antagonizing New York City. But
it makes sense for those congressional races. I guess that's the political calculation.
I don't think it does, though. It really, that doesn't make sense to me either. I also love that when she brought up the diner example, she used Pershing Square Diner as an example.
It's right across from Grand Central.
It's right next to Grand Central.
No one goes there that isn't using Grand Central. It's the most insane example. Yes, thank you for re-raising that, because that really is making me crazy. It's literally you walk out of Grand Central and that's the diner there. No one is ever going out of their way to go to that diner,
I'm pretty sure that the number of people who eat at Pershing Square every day who have driven there in a car is one.
Yes, one person. Maybe it's Kathy Hochul's assistant or something.
How would they know? Does the maitre d' ask people as they come in, did you come from across the street or did you drive here?
Well, did you see that Vox story which said business owners widely overestimate how many people drive to go to their stores?
Oh, this is so so true that the demographic of business owners massively over-indexes on car owners. And because they drive in, they think that their customers do as well. Even though logically they can look outside their store and see like 0 free parking spots. And they can realize that even if you do drive in, no one's going to spend, as I say, $80 trying to, park in a garage in order to be able to spend $5 on a slice of pizza. Anyway. If you have a theory of what is going on here, or why Joe Biden and Pete Buttigieg seem to be happy to be going along with this, have you been following this whole twist of the whole tale? Like, the reason she can do this is because the reason she can legally do this is not because she has the votes at the MTA board, because it looks like she doesn't. It's because in order to be enacted, there's like a rubber stamp that needs to be rubber stamped by the feds, something called VPPP. And the feds are like, oh, well, I guess it's not happening, so we're not going to give you the rubber stamp. And then without the rubber stamp, it can't happen. And then, like, when the DOT is asked about this, they're like, well, it's not happening, so we don't need to rubber stamp it. The whole thing is really odd.
It seems not well structured if just this one lady can be like, forget it. After all this work and all these votes and all this spending, right? I mean, we live in a democracy, don't we?
Don't we? Don't we?
Something about votes and people? I don't know.
Are we ready for a numbers round? I'm gonna kick off the numbers round. My number is 13.4 million, which is the number of cars sold by Chinese car makers in 2023. And that is interesting because it is more than the 11.9 million, which is the number of vehicles sold by American car makers. For the first time ever, Chinese automakers have sold more vehicles than American car makers.
But Europe just passed tariffs. Europe just passed tariffs on the Chinese automaker. So maybe this is a peak.
This is not peak. I can guarantee you, like, there is never going to be another year ever in the history of the planet where American car makers make more cars than Chinese car makers. I will happily enter into a bet with you on this one.
No more bets.
No more bets.
There's too many bets going on. But you might, I mean, they're pretty chunky tariffs, right? In Europe.
Their biggest market is China, and their other biggest markets are all in Asia.
We need an index of Felix's portfolio of bets so that you can bet for or against.
I know. I really do need to. I do need to keep a spreadsheet of this because otherwise, I always just lose track. Elizabeth, what's your number?
My number is 6,000, and that's dollars, and that's the starting price for a big walking piano of the sort you saw in the movie Big.
Wait, a piano that walks?
No, it's a piano that Tom Hanks is dancing on.
Oh, that you play by jumping with your feet.
Yes. So there was the inventor of it is a guy named Remo Saraceni who died, and he was an inventor of interactive electronics. So he made a bunch of other stuff like this that exists in design museums all over the place. There, where you have instruments that respond to sound and stuff like that. And then there have been a million lawsuits because toy makers, copycatted the piano from Big, and some of them are still ongoing. But if you want an original one, you can go to info@bigpiano.com and inquire. My favorite detail about this guy, though, was that he got his father in trouble as a child for turning a poster of Mussolini into a kite.
He got his father in trouble?
Yes. Well, they were in Italy. He was born there.
Emily, number?
Felix, number 14.99. That is the price of the Vedir Ultra Slim mouse mover for sale on Amazon.com.
Is this a Wells Fargo number?
Yes, I'm telling you about the price of the Vedir Ultra Slim mouse mover for sale on Amazon.com because Wells Fargo apparently fired more than a dozen workers, in wealth and management employees to be more specific, for using these mouse movers. I don't know if they were specifically the Vedir. There's all kinds of ones for sale on Amazon. These are mouse jigglers. You basically put your mouse on the little thing and it shakes your mouse so that your bosses who are put monitoring software on your computer to make sure you're working still think you're working. But I guess these people got caught and got fired. And Matt Levine had a nice write-up of it, basically, first of all, saying like, come on, like, remember the fake account scandal, right? Like Wells Fargo, like, figure out a better way to measure productivity. You're doing it wrong. Like every time you try to measure productivity with fake accounts, right? It was like, you had to create a number, or you had to sell a number of bank accounts to customers, and workers couldn't do it, but they felt scared, so they created fake ones. And now I guess you had to move your mouse a bunch of times to show that you were working, and workers couldn't do it, so they got mouse jigglers. It's like, come on, Wells Fargo, like figure out a better way. Like you are mixing things up. You're not doing it right. Also, I want to know if anyone uses these things. Please email us. slatemoney@slate.com. If you use a mouse jiggler or if your company is monitoring you, I want to know about it. I think it's a bad idea.
The thing that struck me about that story is that it wasn't the rank and file tellers, who were like the victims / perpetrators of the original Wells Fargo scandal. These are the wealth management folks. These are meant to be like the high touch, like, I'm going to help you, invest your trillions.
Yes.
And like, it's everywhere in Wells Fargo. It's just yeah.
And Levine, he has like a list of like other ways you could measure these people's productivity, how many clients did you acquire? How much money are you managing? Like so many other things besides like droning on your computer, jiggling it's really interesting.
On which note, I think we will wrap it up for this week, unless, of course, you are a Slate Plus subscriber, in which case you will listen to Elizabeth Spiers ranting about restaurants barring people under the age of 35. For the rest of you, thanks for listening. Thanks for sticking with us all of these years. We're 10 years old at this point, and it's just been amazing to be doing Slate Money. And many thanks, of course, to Cheyna Roth and Jared Downing for producing. And we will be back next week with more Slate Money.